He expects the Fed to go with a quarter-point cut on Wednesday. First of all, it's good to see you.
Good to see you.
So there's a couple of sort of things in the cross currents here. There's Japan's raising rates, so our dollar is falling. It's 50-50 on whether the Fed's going to go 25 or 50. Is there anything in this that tells you we could be set up for the kind of big move that we saw in early August or even early September? You know, in other words, to the downside?
I don't think so. I mean, I think the market is not going to like either, quite frankly. It's none of the above right now. If it's 25, they're going to argue it should have been 50. If it's 50, they're going to say what else is going to go bump in the night that we don't know about. And that's the issue that we're having right now. I think with unemployment where it is, I think spending's coming down a little bit, debt's coming up a little bit, but it's not catastrophic for the consumer. So what's the upside for the Feds to go 50? That I don't see.
Well, the people might just say the upside is rates are literally too high. You know, let's say we're at 5.3% because of the range, and it should be somewhere like 3.5%. And that's what the market's pricing in. Why not go 50?
Yeah, and that's exactly why if they do go 50, I think the issue is they're more afraid of a reinflationary environment than they are of actually dipping into a net negative economic slowdown. I think that's better for them than seeing inflation hike back up.
How do equities react in either scenario, a 50 or a 25?
And I think we got to look at a big picture with it, too. I mean, we had a good year in the markets. It climbed the wall of worry. We had a huge year. We have a big number. Earnings are slowing down. Big number in terms of the valuation. Earnings are slowing down.
30-some all-time highs on the S&P 500.
Wow. That's right. And so, again, long term, I love the trend. We have favorable fiscal, favorable monetary policy. This is setting up for a really good long-term trend. Short term, this is not the time to be sticking your neck way out there. I think this is the time to be very cautious.
But do we, and I'd be curious for Rick's thoughts on this in a second, do we have favorable fiscal and do we still have favorable monetary, right? If we're talking about the start of a rate cutting cycle when things might, you know, I mean, maybe that'll be supportive on the margin, but we've seen that tightening in real rates lately at the same time that the fiscal's kind of running out. And there's all this, you know, with the election talk about what this or that candidate's going to do to fix that. So can we count on that support?
Right now, I think you're going to, especially in an election year, you know, we always talk about election protection, but I don't think candidates are going to be talking about raising taxes right now. And I think that is the kind of rhetoric that the market actually feeds into and supports. But we do have high valuations. That's what you're saying. The market has seen all these new highs. I think September and October are going to be true to form. The volatility in this silly season will continue.
Especially post a corporate earnings window. But yeah,
Mike Santoli, jump in here with any thoughts that you might have. I'm curious how you see the next 3 months setting up in the market.
Yeah, there's no doubt we've rebuilt the valuation, but the last time we were here, around 21 times earnings, or when we first got here, let's say, in July, it felt as if investors were positioned more bullishly and they were expecting nothing but good things. So I think we've actually rebuilt a small wall of worry, if that helps. And I think you can usually hang on to a higher valuation if the Fed is cutting at the same time that earnings growth is broadening out. Now, that's what the consensus says is going to happen. The 12-month forward S&P earnings forecast continues to climb even as the third quarter gets cut. So whether that's unrealistic or not is going to have everything to do, again, with whether we have a soft landing or not. And I think that's why the market's going to have to keep the economy on a kind of a short leash and constantly test the premise that, in fact, we're hanging in there. And that's why I don't know that we're going to run away to the upside, even if you do get a relief rally of some sort, perhaps post-election.